Hello, Silver Queens. Have you ever wondered how much all the wealth in the world adds up to? As of 2025, that amount is estimated to be $583 trillion. Looking at the total global wealth by asset type, the largest proportion is real estate. Real estate accounts for approximately 36% of total assets, which is $326.5 trillion. The second largest proportion is the bond market. Although the exact percentage is not specified, it is said to account for 73% of total global wealth along with real estate. The size of the global stock market is $95.9 trillion, representing a significant portion of total wealth. The broad money supply is estimated to be $82.7 trillion. The total value of gold is $11.5 trillion, accounting for a relatively small proportion of total wealth. Alternative assets such as cryptocurrencies, artwork, and collectibles also account for a portion of total wealth, but their proportion is relatively small. This asset composition can fluctuate over time, and the composition ratio of total wealth can change, especially depending on fluctuations in stock market and real estate values. Today, let's explore how this enormous amount of wealth is distributed, and how it relates to our retirement lives. In particular, in today's video, we will share practical tips on how we can prepare for a stable retirement in this world of immense wealth. First, let's take a look at the global wealth distribution structure. Currently, the world's wealth shows an extremely unequal structure. The top 1% holds 45% of the total wealth, while the bottom 50% holds only 1.3%. In this situation, how should we manage and grow our assets? This is where the importance of asset allocation strategies comes to the fore. Of particular note is the wealth increase rate of the super rich. In 2024 alone, the assets of billionaires increased by a whopping $2 trillion. This is a growth rate 3 times faster than the previous year. Among them, Elon Musk, who owns Tesla and SpaceX, ranked first with assets of $433.9 billion. The next trend to pay attention to is the intergenerational wealth transfer. Over the next 20 to 25 years, a staggering $83.5 trillion, or 108.55 quadrillion won, in assets, is expected to be transferred from the baby boom generation to the millennial and Generation Z generations. What does this mean for us? It suggests the importance of inheritance tax planning and structuring multi-currency portfolios. The regional distribution of wealth also shows interesting changes. The United States ranks first with 813 billionaires, but the growth of Asia, including China and India, is remarkable. Although 39% of total global wealth is concentrated in North America, investment opportunities in emerging markets continue to expand. This means that we need to take a closer look at the global market when establishing investment strategies. One of the most notable trends recently is the asset management revolution using AI. According to a report by Morgan Stanley, AI-based hyper-personalized investment solutions are being actively used to increase the wealth of the wealthy. And now, the middle class can also enjoy the benefits of this cutting-edge technology through robo-advisors. Tax reforms and international cooperation can also have a significant impact on our asset management. For example, the abolition of non-domicile taxation being pursued by the British Labour government, or discussions on joint taxation of the super rich by G20 countries, could greatly change the global tax environment. We need to carefully examine these changes, as they affect our asset protection strategies. The rise of alternative investment assets is also a noteworthy trend. Private equity and infrastructure investments are gaining attention as stable sources of income, and cryptocurrency ETFs, such as Bitcoin and Ethereum, are also becoming full-fledged. This provides us with various investment options, but it is also an area that requires careful consideration. Global wealth is expected to continue to grow. It is projected to reach $629 trillion in 2027. In particular, the expansion of ESG investment by millennials is analyzed as a major growth driver. This suggests that we should also consider environmental, social, and governance factors when investing. However, even amid these growth prospects, we must not overlook global risk factors. The World Economic Forum (WEF) has identified geopolitical conflicts and climate change as the greatest threats. This means that we need to have a diversified and crisis-prepared asset composition. So, based on these global trends, what practical strategies should our middle-aged and older generations establish? First, you can consider incorporating tech stocks that reflect global trends. For example, including stocks of AI-related companies or eco-friendly technology companies in your portfolio. Second, you need to establish a plan for intergenerational asset transfer. As mentioned earlier, a huge amount of assets will be transferred between generations over the next 20 to 25 years. It is important to establish an efficient inheritance plan to prepare for this. Third, actively utilize AI financial tools. Now, let's take a closer look at how these strategies are actually applied through specific examples. The case of 65-year-old Tom Johnson from Dallas, USA, is interesting. He created a stable monthly cash flow with the 5-3-2 bond ladder strategy, which involves purchasing bonds in a ratio of 50% for 1-year bonds, 30% for 3-year bonds, and 20% for 5-year bonds to adjust the maturity dates. With this method, he was able to consistently receive $2,500 in interest per month, even during last year's interest rate hike period. In Korea, Shinhan Financial Group's Smart Channeler product, launched in July 2024, gained popularity, with over 1 trillion won in sales in just 3 months using a similar principle. A newly emerging trend in real estate investment is silver co-housing. In Yongin-si, Gyeonggi-do, Korea, 59-year-old Choi Young-hee rents out the second floor of her detached house to young people and resides on the first floor, earning an additional income of 1.2 million won per month. With the profits generated in this way, she is reinvesting in shares of a dental hospital located in Chiang Mai, Thailand. According to data from the Korea Real Estate Board, the number of investors in shared housing aged 50 and over increased by 47% in the first half of 2024 compared to the previous year, with an average monthly rental income of 850,000 won. The NFT pension fund case, which opened a new horizon for digital asset management, cannot be missed. Andy Hall, 63, from San Francisco, USA, is earning a 9.7% annual return by depositing 3 NFT works by famous digital artist, Beeple, into a fund, which is operated by combining loan interest rates and exhibition fee income secured by NFTs. The second career startup after retirement case that succeeded in Osaka, Japan, is also noteworthy. Keiko Tanaka, 61, learned pet grooming skills and opened the Petist shop in April 2023, and is currently recording sales of 5.8 million yen per month. Investing in bio overseas real estate, which manages health and assets at the same time, is also a new trend. Park Jin-woo, 57, from Korea, purchased 2 apartments near a general hospital in Johor Bahru, Malaysia, earning approximately $1,070 in monthly rental income, and also holding shares in the hospital. This area is located in the Singapore-Malaysia high-speed railway station area, which is scheduled to be completed in November 2024, and the price has risen by 27%, with the added advantage of receiving a 30% discount when using the hospital. Finally, we emphasize the importance of preparing for digital legacy inheritance. In the case of San Diego, USA, in July 2024, 68-year-old Robert nearly permanently lost assets worth $9 million because he did not specify the Bitcoin wallet password in his will. The commonality of all these strategies is in diversity and flexibility. As of 2025, the U.S. Federal Reserve (FRB) is maintaining the base interest rate at 3.75 to 4.00%. But the Eurozone and Japan are still pursuing ultra-low interest rate policies. In this global economic environment, we must 1. Utilize AI technology for dynamic asset allocation, 2. Diversify into 3 or more currencies, and 3. Establish a plan for intergenerational asset transfer. You see, wealth is like a flowing river. It is a big mistake to think that yesterday's success formula will work today. As of 2025, the probability that you, who are 60 years old, will live to 90 is 38%. To prepare for more than 30 years of retirement, you must convert to liquid assets as soon as possible and open your eyes to the global market. In conclusion, global wealth continues to increase, but its distribution is very unequal. We must understand this situation well and establish our asset management strategy according to global trends. Through I-based asset management, intergenerational asset transfer plans, and global investments, we can make our retirement more stable and prosperous. We hope that the information you learned today will be helpful in preparing for your retirement, understanding the flow of the global economy and establishing our strategies accordingly, and at the same time fulfilling social responsibilities. Isn't this the true meaning of wealth that we should pursue? We hope your retirement will be more prosperous both economically and mentally. Until now, this has been Silver Queens.